Hey YouTube, what's happening? Chris here. I want to bring you all an update on Litecoin, and what we're going to be doing today, a little different. We're going to just stay here on this 3-day chart. I really want you to see some things on a longer term. So remember, when you're going through charting, what you always want to do is really start either with that month or the 1 week chart, and then go to the day chart or the 3-day chart, then the 1-day chart, the 12-hour chart, and then I like to go down to the 4-hour chart. So those are the things that I like to look at, guys. I really like to step back and kind of see what's forming, what moving averages we're running into, different types of things. So we're going to dig into this. If you all could like, subscribe, hit that notification bell if you like what we do here. We're trying for 100 likes on this video. You guys have been killing it for me, and I really appreciate it, and I hope you like these videos. So I'm going to get this to you, and we're just going to dig in, guys. So this is Litecoin on the 3-day. Right now we're at $58.48. We're down 1.65%. And on the 3-day chart here, you're starting to see that rollover that we've been looking for a while now. And what I pulled up here was the stock RSI, and you can see how we're almost putting that triple top in. So we topped out here, we topped out here, and then we actually failed here. We didn't even get as high as this second top, and now we're starting to roll over. We have that cross right there, and we're starting to move back down. So what we're going to do, we're going to have to be patient, and we're going to have to wait and see if we continue to break down first through this area right here at 59, and then down here at around that 48 on the stock RSI. That's what I'm looking for. But you guys kind of see that triple top here, and what you see is, look where we topped out right here, and look where the price was at, $41, and now look where the price is at, and this is actually lower than it was back in here. So really keep in mind, guys, you know, we got to pay attention to these throwbacks and pullbacks and corrections and all different types of stuff. Really got to pay attention to them because they happen, and we have to be aware, and we have to be prepared the best that we can. So I'm going to get the stock RSI off there, and the next thing we're going to look at is just the candles. So with the candles here, I'm pulling everything off, guys, besides the moving averages, the candles, and the volume here. So we're still up above this long-term trend line, or intermediate term, I'm sorry, intermediate term trend line that I have in yellow here. We've made it to that intermediate mark, 3 months or more. So I'm looking at that as a place of a potential bounce or potential support. I do feel like we could definitely have a correction down into this area at some point, guys, or we're going to meet this trend line again at some point to see if we get a beautiful bounce off it like we did here, where we just continued to move to the upside. So that's what I'm looking for in terms of, number one, we're seeing if we can hold this. So this is on the bullish side, guys, our support. Hold this intermediate term uptrend in yellow. Then it would be this 50 moving average in blue. And then it would be this 20 moving average, where we had this golden cross of our 20 moving average up over top of our 50 moving average. And also this white trend line is still holding that I've had drawn for quite a while. And that's that fanning technique on trend line. So this was our main trend line that we have down here, and then we flared off and broke into another area where we could have put a trend line, and that's what we're seeing. We're going to see if that holds or if we're going to break through that. Okay, so with these candles though as well, you're seeing some rejection. So there's some wick rejection. Here's a doji candle there. You know, guys, here's a wick up here, and this was almost like a dark cloud cover candle in terms of this candle right here, dark cloud cover. You know, we got up higher, and we're just basically casting that shadow on this white candle that was trying to push up higher, and then all of a sudden this started to come in. You're having that doji, that indecision, and now we're actually looking like we had some rejection to the upside there, and now we're starting to get pushed back down. See if we can test this 100-day moving average and see if we get a bounce off that, or if we're just going to break right through that and come down here and see if we're going to test that 20-day EMA, which is around that $49.56, which really wouldn't be a bad spot because it'd be around that psychological $50 mark, and we're due for that correction, guys. I will continue to say it. Could we get overextended to the upside? Absolutely, but we are due for that correction. And the next thing I'm going to show you another reason for, so we have the stock RSI, we're due for a correction on the 3-day. Now we're going to look at the Bollinger Bands. I want to show you something on the Bollinger Bands. Let's see. All right, so with the Bollinger Bands, guys, this red line here, this is called the middle band. So that's the middle part or moving average of these Bollinger Bands. And right now we're still at the top of these Bollinger Bands. And typically when you're at the top of these Bollinger Bands, guys, you will pull back onto that middle band. All the time it happens. So just be aware of that. And then also to the downside, when you start hitting this downward part of the Bollinger Bands, a lot of times you get pushed to the upside. You know, here we wicked down through them, and then we got pushed to the upside to that middle band that was acting as overhead resistance for the longest time. And now we do have that as acting as support. So that is a good thing. But in terms of the Bollinger Bands, we're overextended on the Bollinger Bands as well. Next one I'm going to show you is the RSI. And these are the ones I like to go through. And really study them hard, guys. You really only need probably 7 to 10 indicators. Otherwise, you're just going to start confusing yourself. And, you know, something I really saw in the RSI, which is very interesting here. So we kind of have this triple top. We got pushed up here. We fell back down, tried again, fell back down a little bit, pushed up again, fell back down. And now what we're doing, we're sitting at around that 65. So I was going back and back testing some things. We have not been this high up to this 65 point since our all-time highs in December. So it's a really big deal that we've gotten up to this point, guys. We just need that cooling down period. You know, maybe for our RSI to get back to around 40 and find a really nice strong bounce off that, or this area of support that I'm seeing on the RSI would be a wonderful spot. Because whenever you have these moves up, guys, so a bounce off this white line here and then a continued move, and that would be off this support right there. But whenever you move and have this type of a run here, especially not accompanied by a ton of volume, a lot of the times you're going to lose half of that move. It's going to retrace, you know, 0.38 Fibonacci to that 0.5 or even that 0.618 a lot of times, or more we've seen in the cryptocurrency space where we've had more than 100% correction. So always keep that in mind and in the back of your head that, you know, we're starting to see these candles up here, these doji candles. So the indecision, that's basically saying, hey, you know, I'm going to calm down right now. The market's going to calm down. And what we're doing is waiting to see if we're going to get another shot up into where we would have heavy resistance here in this red box, or if we're going to start breaking down through this 100-day moving average as well as this white trend line that I've had drawn for quite a while. Next one we're going to look at is the MACD. And guys, if you can see here, as we just pull back, you can see this top. So we moved up to here, we got rejected, we fell back down, we got rejected, fell back down, almost tried again here and still got rejected. And what you're seeing here is we didn't just keep continuously pushing through this area here. We have not broken through that yet. Now we're just kind of doing that cool off sideways. Could it be one of these where we shot up sideways, then you push up a little higher? So here sideways, then push up a little higher into this area to $70. That could happen. Anything can happen. A whale can come in, and it is what it is. That's why they're called market makers. But from all the indicators that I'm looking at, the candles that I'm looking at, the decreased volume that I'm looking at, the stochastic RSI, the Bollinger Bands, the MACD, all those things, they're looking a little more bearish right now, guys. And I'll even show you the MACD here just so you can see what's happening. So right now it's looking like it's starting to want to roll over. Do you see how we're starting to get that hook here? And we're going to see if we start to roll over. The histogram starting to tick to the downside as well. And guys, we have not crossed this red line here with this white line where we've had that bearish cross or death cross is what it would be. You know, we have not seen that since December 15th. No, I'm sorry, it's even back to this point, guys. We did not have that cross since November 15th, 2018 is when that crossed under, and it stayed under until we got that overcross here. So now we're going to have to wait and see if we calm down, pull back, you know, maybe kiss off this line a little bit before moving higher, or if we're just going to break down through it and we start rolling over. Look how long this histogram now has been to the upside. So there has to be a cooling down period, guys. And what I would look for in terms of support with the Fibonacci, because I always love to use the Fibonacci, and we'll go from this doji candle here to the high, so the swing low to the swing high. Look, guys, this 50% right there, that 0.5 would be around $42, and that would also be around this trend line, that intermediate term trend line that's been holding so well for us. So pull back to there would not shock me at all before another attempt to try to get up over this, because there is a lot of room to run if we do get over this major resistance that we're having right now. So if I pull this Fibonacci off, take a look at this area, guys. So if we get up above this right here, and we're going to go off the real body, $65, we could easily run up here to around $85 to $89. Do you see how these candles, we fell so hard and so fast? A lot of times you'll make that up on the backside. It's something you want to pay attention to. But I would love to see you guys up here. We're starting to have that cool down, pull back. We break through this white trend line. We start falling. We see what we do with this 20 EMA. But ultimately, I would love to go long off this lower trend line right here, this intermediate term trend line. I think a lot of people will probably be looking at that to go long, but we're just going to have to wait and see. We're going to see if this is treated as a concrete wall, or if we start having closes below that yellow trend line. If we start having closes below that yellow trend line, you guys really want to start paying very close attention, because we could have one of these happen. If we close below that trend line, something like that, this move right here definitely could happen. And this move happened because of our descending triangle. And if you take your trend lines, remember how we go over all the chart patterns, what I've been trying to do with you guys. So we'll bring that to about right in here. We'll go off the wicks there. And I want to make this a little thicker for you guys so you can see. So we had that, and then we'll just do our horizontal ray right here. And that's in red. So what you're having, guys, is lower highs, and then we had that flat bottom there. And then once we broke through that, you see this candle, how we broke through on a lot of volume as well, right in here. And then it just continued to fall. We did not have that pullback where sometimes you'll come back and test that, and then you start falling down. This one was just a clean break. So these chart patterns really they play out, guys, a lot of times. The $6,000 at Bitcoin, that descending triangle, that played out for a long time. When it broke hard, just like my encyclopedia of chart patterns says, that those breaks can be upwards of 36 to 53 or 59% on those descending triangles. They can break really hard, especially if they've been in play for a long time. So all these things, keep in the back of your mind. I'm just showing them to you. This is on the 3-day chart. We're looking more bearish than we are bullish, but we are holding this 100 right now, which is bullish. We're holding this white line, which is still bullish. We had our golden cross. We want to see if we can hold this 20 EMA, which we're still up above, so that's bullish. We're up above this ultimate trend line here that I have drawn here, intermediate term trend line in yellow. We're also up above the 50. So in terms of the moving averages, we're up above a lot of things, guys, and we're treating them as support. It's just some of the oscillators now are showing us that we're having some trouble. And you can see that 100 moving average cross down through over top of this 200-day moving average, which is all the way up here at around $93. So that would be a death cross that happened there. So pay attention to it, guys. Let me know what you think down low. God bless each and every one of you. I appreciate you being here with me, and I hope you got something from this. Take care, friends.